Okay team, so this week we have some incredibly important inflationary data, and you can see the S&P 500 or the SPY here has been pretty flat over the last 3-week session. You can see we put in some pretty big ranges. We hit lows of 433s over the last 20 days and we hit highs of 453, but ultimately we are ending right around now here on Monday, right around that 447 level, which is about where we were 3 weeks ago. And so really the market's been pretty flat, although rangy, over the last couple weeks, and the market is really waiting for a couple different things, one of them being this week's CPI and PPI inflation data, which is expected to increase month over month. Taking a look at this data now, you can see that core CPI is staying the same relative to the last release. The last one came in at 0.2%, and this one they're expecting 0.2%, with the base CPI here, the regular CPI, showing about 0.2% last time. It's now expected to come in this month at 0.6%, so a 0.4% uptick. If you look at CPI year over year, last one came in at 3.2%. This one is expected to go up again 0.4% to 3.6% as expectations. And core CPI, which is CPI excluding food and energy prices, is expected to actually bump down 0.4%, showing up last time at 4.7%. This time it's expected at 4.3%. So a little bit of mixed results here, but these releases are going to be incredibly important for the upcoming rate hike decision. If you don't know, every 6 weeks the Fed meets to determine what they want to do with interest rates, and this one they're expecting a skip or a pause. So they're not expecting to raise rates this upcoming cycle. And then they also do, a big FOMC meeting, a big press conference where Jerome Powell speaks on the economy, what they're expecting moving forward for the rest of the year. And so again, that will be incredibly relevant, and this CPI inflation report will influence what the Fed chooses to do during that upcoming FOMC meeting, which is on September 20th this month. So this one is on September 20th. It is next Wednesday. So this Wednesday we have big economic data. Next Wednesday we have big economic data, and we also have PPI, which is the producer price index. With inflationary data, we have two sides of that coin. We have the consumer price index, which is how much prices are rising for consumers, and then we also have the other side of that for businesses, which is called the producer price index, which is how much inflation or prices are rising for producers or sellers or ultimately businesses. And you can see if we look at that one here, core PPI is expected or showed up last time at 0.2%. We don't really have an expectation for core PPI yet, but you can see the producer price index month to month is expected at 0.4% this month relative to the 0.3% showing last month. We also have jobless claims numbers, which is how many people are filing for unemployment, and this drops Thursday as well. That is expected at 220K versus 216K last week. And then another release we also have on Thursday is retail sales. You can see they are expecting to go down from 0.7% uptick all the way down 0.6% to a 0.1% uptick month to month in US retail sales. And so very important day on Thursday where we have PPI, retail sales, jobless claims, but the biggest one is going to be Wednesday when the CPI report comes out, and then next Wednesday we have the FOMC meeting where they choose to raise or lower rates. Again, they're almost certainly going to pause or skip rate hikes during this next cycle. And to understand why they choose to do that, if inflation is really bad, if inflation data is showing worry there, the Fed usually is a little bit more aggressive in their rate hike decision. That's the point of raising the federal funds rate during these FOMC meetings, is because it makes banking more expensive, and then banks raise interest rates to consumers, and then when banks raise interest rates, consumers stop spending as much, and that lowers prices over time. And that's the theory or the logic behind these FOMC rate hike decisions, and that's why it's an important day next Wednesday. But again, this Wednesday's CPI inflation data will be a huge tell in what happens moving forward. And yeah, we'll all be watching here. We'll be streaming the entire thing live right here on YouTube like we always do, so be sure to hit the subscribe button and hit the notification bell if you want more alerts on that. Another big day that might bring some volatility this week is quad witching day on Friday. Now, I don't think it's actually quad witching day anymore. I think it's just triple witching day. But if you don't know what quad witching day is, it's a day of historical volatility. And ultimately, it's what it means, what quad witching means, is it's a day in which all 4 major contract types expire on the same day. This would be stock options, index options, stock futures, and index futures are all expiring same day. This upcoming coming Friday, September 15th. And again, historically, it only happens a couple times a year. And again, historically, this is a pretty big day for volatility. This is when we start to see some big price movements, some big volatility, some big fluctuations in price. And so understand what this Friday could mean for the markets. It could really influence things. And with the market being pretty choppy over the last 3 weeks, like I said at the intro of this video, it could be a day where we break out of this range. We'll ultimately see what happens. But again, we will be streaming live, covering this entire thing as it happens. We'll see where the SPY ends. Let me know in the comments below what price you think the SPY ends at this week, what price you think the Q ends at this week. And again, we'll see if you guys are right. Let me know in the comments below. And yeah, we'll see you guys later. Again, we are going to stream all of this data. We're going to stream quad witching. We're going to stream the CPI inflation data. We're going to stream Thursday with retail sales, jobless claims, PPI, all that good stuff. And then next week, again, the FOMC meeting, CPI on Wednesday. Just a lot of stuff to talk about this week. Another thing that happened over the last month or two is that I was funded on multiple different Top Step accounts. And so as you can see, Top Step prices are still at $49 for the base combine, the 50K combine. And it's the easiest way to test your skill if you want to know whether you're ready to really size up with your day trading. This is a way where if you lose, you're only out 49 bucks, but if you're good enough to pass this challenge, you can get funding between 50K up to 150K with a 90% split. Again, it's the most useful for traders looking to test their skill, and I think it's really, really useful for traders in order to limit risk, especially when you're first getting started. And so if you want to check it out, they are a sponsor of mine. I'm definitely biased in their favor because they pay me money, but they're incredibly useful for traders, and I'll include that link in the description. Check them out as well. Y'all be safe, be good. Again, we'll see what we get for this week with all this crazy economic data and volatility potential. And so again, let me know what you think will happen this week in the comments below. Good luck, and we'll see you all then.